The top movers in the equity markets, Tesla, AMC, Southwest, all companies that are moving on headline news. But for a thin trading week, what are you doing to position yourself for 2023?
Yeah, thanks, Kayla. Look, it's certainly an interesting time for investors. Usually we'd be looking forward to maybe a Santa Claus rally at this time of year. But I think heading into 2023, the dynamic is a little bit different. One, this year we are seeing a lot more tax loss harvesting than we've seen in the past, which makes sense given the losses that a lot of investors have endured. But number two, of course, we're still facing some headwinds entering 2023, including, of course, we still can't fight the Fed. The Fed has told us it's not done raising rates yet, and we expect at least 2 more rate hikes in early 2023. And then, of course, we're facing a potential economic downturn, at least a period of softness to below potential growth in the U.S. economy, and probably the global economy slows as well. So in that environment, markets have put in a lot of work to the downside already. That's the good news, but probably can't ignore this pending downturn and these pending last few rate hikes from the Fed. Now, all that being said, I do think as we head towards the back half of 2023, that's when we're really facing a probably better environment for investors. Perhaps inflation continues to moderate. The Fed pauses, and maybe global central banks pause as well. The economy hopefully stabilizes. And as we head towards the back half, we do think that there's a credible case that the Fed could start signaling at least rate cuts. Keep in mind, we're well above the neutral rate, around 5%. So they could start thinking about moving back towards neutral, which we think would really set up the market well.
But that would still be months before that happens, Mona. And, you say equity markets have already put in a lot of work to the downside, which is perhaps just a nice way of noting that these indices have had their worst year since 2008. So I'm wondering at what point you think that the correction has been enough and that they're going to start moving up from here.
Yeah, absolutely. Look, I think could we potentially retest the October lows? I think that could be a credible case as well. We don't think, though, necessarily we have to move well below that in order to stabilize and then look forward. Keep in mind when we do look historically, markets are forward looking. And even if we are in a recessionary period, markets start to bottom and rebound 3 to 6 months ahead of the end of the recessionary period. Now, what we're seeing from, a style perspective, a size perspective, a sector perspective, markets are still very defensively oriented, and we would expect that to continue as we head into 2023. So probably value over growth, probably those defensive parts of the market still hold up relatively better. But as we look towards a potential recovery period, that's when that recovery playbook comes into play, and that's when you start to see potentially quality growth, cyclical parts of the market, longer duration parts of the market start to outperform as well. And so I think right now, keep doing what we've been doing in terms of style, size, and sector, but we could start thinking about a recovery playbook perhaps by the second half of 2023.